Hello, everyone, and welcome to episode 110 of the Vacation Rental Blueprint. We are very excited to be continuing this journey with you all, and we're going to be shaking it up a little bit, 10 episodes in, continuing to provide as much value and building your competence and confidence in the areas of self-managing your short-term vacation rental. But we also are starting to delve into some areas that require a few experts to chime in and provide their insights and expertise. So, we are very excited to get started with our new partner profile series. But as always, I definitely want to take a minute and introduce my co-host, as always, TC. TC, hello. How's it going?
Great to be here, and I am very excited to do our first partner profile. We've been talking a lot about this, and I can't wait to get started.
And we've been talking a lot about this. I'm super excited for it as well. I'm also kind of checking that with a little bit of aggravation this week, just because, as we talk a lot, we've got vacation rentals, we've got some in Central Florida, spring break, Easter weekend. We are in spring. We're hard charging in spring, and occupancy is ramping up. And I think in this last weekend, TC, and talking to you, we both got hit pretty hard this weekend with some last minute renters, not trying to take advantage of any low rate, but last minute renters who are in really tough spots because they obviously have owners that aren't listening to the podcast because they checked into some dirty vacation rentals. And I know you got hit hard with it. I know I got hit hard with it. But really an aggravating weekend for me, just in terms of having to listen to some of these horror stories that guests are having to deal with.
Yeah, this was the first. You think you've seen it all, only to experience something you've never seen and hoped you never would. And it's a story that ended great, but I'll take you back to, I guess it was last Saturday night, about 10 o'clock at night, watching a little bit of TV, and I get an email. And it's an outreach from a guest via Airbnb. And their question was, can we check in tomorrow? And I'm usually pretty skeptical of last-minute check-ins like that. Typically doesn't go...
No, go fly a kite.
Exactly. Yep. Typically it doesn't go too well. So I try to be kind. Hey, tell me, what's up? What's going on? Well, clearly, very early on in the conversation, this delightful, and I mean delightful young lady, she and her family of 5 total, husband, wife, 3 little kids, they got in the car and they drove 8 hours to enjoy a week in Orlando. You could tell she was frazzled. It had been a long day. They drove a long time in a car with 3 young kids, only to get to their Airbnb, and it was a disaster. And she was upset and stressed. She couldn't get Airbnb to call them back. And this is not a shout out against Airbnb. I'm just stating the facts. Right. Couldn't get Airbnb to call them back. And finally, I just, we'll figure this out. You guys get some rest. Let's check in first thing Sunday morning. We'll get this all figured out. And I'll do my very best to get you into our house. It was available. Next morning, she contacts me very early on, just like she said she would. Still had not heard back from Airbnb. While we were talking, got a text from Airbnb that the owner was only willing to reimburse them 20% of their cash outlay. Now remember, they had stayed in this property 1 of 5 nights, and the owner was only going to reimburse them for 20% for what sounded like an absolutely deplorable environment for the family. So I worked with the family, and they were just amazing people. They were so kind. They were so great to deal with. And we got them all checked in. So by 3:30 on a Sunday afternoon, we had them all checked in, ready to go, ready to enjoy their week in Orlando. But here's where it ends really well. This family of 5 was so amazing. I don't think anyone has ever left our vacation home at 2842. We'll call it 2842. In better condition than this family. It was absolutely spectacular. So much so that on their drive back, we were texting back and forth about, hey, come back anytime. For families like yours that take such good care of our home, we're happy to give you the friends and family rate. and it ended extraordinarily well. When you've driven for 8 hours, it's a long day. What you want is a great first impression and a great beginning. They didn't get that, but hopefully we were able to recover for them to give them a great week in Orlando. But tough time, and I do want to reach out to Airbnb to better understand how their refund policy works. I've been doing a lot of reading about that in the last week, and I'm getting a little bit of conflicting information. So I'm reaching out to Airbnb, get some clarifying information, and we'll come back and share that with our listeners.
I got fired up when I was listening to this, and I threw a couple things out on social media that was just like, if you are not responding to your guests, just go ahead and sell your Airbnb. Just go ahead and exit, because you're not cut out for this. I mean, if you do not spend the time necessary recovering people, and I guarantee the owner was probably had a property manager, and they probably thought to themselves, my property manager says the house is clean. I don't believe these people. The house is clean. Don't refund them the money. Refund them the minimum. This isn't my fault. I have a property management company. I'm just the owner. And it just really ticked me off, because it's just not the foundation of it's not the mindset you need to enter this space in if you're going to operate a short-term rental. It is the completely ass backwards way to approach this business. Instead of bending over backwards to connect with their guest and try to fix it, they lost this customer. This customer will never come back to them, and you gained a customer. So it's a win on you, but it's definitely that challenge of, between you and I, we got multiple calls. How many other individuals checked into Airbnbs, VRBOs, not to, call any, specific platform out, but how many people check in over each weekend and have this same experience? And I can tell you it's probably a surprisingly high number, because there's a whole thing called Airbnb bust floating around right now, and a lot of it is attributed to these types of experiences.
Well, you and I talk a lot about this at the very beginning of launching this podcast, and you said the word, it's mindset. If you don't have a mindset, if you don't want to take care of guests, if you don't want to go out of your way to make sure they have a great experience, it's just the wrong industry for you. Find those dollars and use them and invest them someplace else. Because I was on the phone, text messaging, email until about 12:30 at night, and that's fine. These guests were in a bad place, and they were on vacation. And I lowered my rates so that the money that they were out, the money that Airbnb didn't reimburse them, I reduced my rate by that amount so that the family wasn't going to be financially hurt by this experience. Now, some could say, well, that's foolish. Why would you do that? Well, because number one, we're in the hospitality industry. And number two, I wasn't thinking about this as a short term. This is a long-term relationship you want to create with these guests, because you want them to come back time and time again. So, not trying to make myself sound like a hero, what I'm trying to define is, this is hospitality. This is what hospitality is all about. And we need all of our folks to live up to that.
Yeah, and at its foundation, hospitality is about being a hero. I mean, that's what it is. It's doing what others aren't willing to do, or going above and beyond, and extending beyond what the basic service is. And I think there's two key takeaways here. One, these owners that we talk to, or these owners of the homes that we talk to their guests, probably weren't listening to this podcast, TC. So A, shame on them, and two, they definitely weren't using our sponsor, CleaningBnB, because I can tell you, CleaningBnB, with those systems, processes, and tools that they have in place, it's specifically designed to eliminate these types of poor performance, because it's a business built on accountability and using repeatable tools and systems in order to ensure a clean house every time. So 2 strikes for these owners. Let's just go ahead and call that out.
Could not agree more.
So we've just spent the first 12 minutes of today's podcast with a investment finance expert on the line, probably nodding off because we're just talking about something so far and away different than what we've invited her on to talk about. So, I think it's important that we get into today's episode, which is on lending, and specifically that early stage lending, because so many individuals are interested in this and they need to understand what I believe, and I think what our guest believes is, they need to understand their position. They need to understand their entry point. They need to understand really what they qualify for. Essentially, even before they do, the majority of what we talk about in the first 9 episodes of our podcast, they really need to understand those foundational components of lending and what they have access to. So that's really why we asked Carrie with Spire Financial to come on today and really speak about something that I certainly am not going to jump in and speak about, something that we require and need to leverage an expert in the area. And specifically, Carrie is focused on short-term rental investment with the ability to take care of loans in 38 states and a specialist in Florida, Colorado, and Texas, and really committed to putting her clients into the best position to get into or on this path for investment property. So, Carrie, hello and welcome to the Vacation Rental Blueprint. How are you?
I'm good. Thanks for having me here.
Absolutely. So we're really excited to have this conversation because I've heard a lot of things about lending, and I've been on a lot of panels and been on a lot of masterminds and also been an audience member to these as well, where everyone wants to talk about how they got to 60, 70, 80 locations. But then you really start to peel back the layers and say, let's talk about how you got into your first. And it's a lot more disjointed of a conversation. It's not really anything usable for so many people who have 0 properties and they want to know how to get into their first property. So I think today I really want to keep it focused on that for our listeners. And I know TC's got questions as well to think through, and I just really want to focus on early stage. How does someone who doesn't have any property, how does someone get into their first property, and what do they need to think about in terms of the lending side of that to best position them for that? So where do people need to be sort of in their financial life? What are things they need to be thinking about right now to get ready to invest in their first vacation rental from the financial side? We talk a lot about mindset. We talk a lot about attitudes towards service and hospitality and systems and processes and cash on cash return. But all of that is really, useless unless they can work with someone like you on that foundational piece. So what do people need to be thinking about as they look at getting started in investing in short-term rentals or just real estate in general?
Absolutely. Well, the first thing, what we primarily look at for any client is income, down payment, and credit score. So those are the big 3 items. And it's the same for any investor. But when they're getting started, it's important to look at those, especially if they've never owned property before. So if they've never owned property before, and I get calls like this all the time, like, oh, I just want to get, my first place, but I want it to be an investment, but I want to put, 3.5% down.
Right.
And I'm like, well, there's an occupancy issue with that. So when you're buying your very first place, you can buy an investment property to start, but you're going to need to put down about 20% in order to do that. Now, the most affordable way to get into investment property is to live in it first. To live in it for a year is the minimum requirement. And when you do that, you can put as little as 3 to 3.5% down.
And that's not lost in terms of that's still a sound investment because you're still getting into real estate. I think you're going to have a lot of people that say, well, I want to get making money on short-term rentals right now. But I think the path that you're talking about is a more realistic path to how do you get there and still grow your wealth.
For sure. And starting that way, there's a lot of opportunity. The down payment assistance programs, and, you can receive, like if it's an FHA loan, you can look at multi-unit properties. You can also look at getting gifts from family members in order to obtain those properties, because it is your first primary residence, and you have to set that intention, like, I'm going to live in this for a year and then move on to the next one. I had a client who bought his first property with a gift from his mom in order to do the down payment, and he only had to bring $2,000 of his own money. What he ended up doing was later on is taking out a home equity line of credit, and he converted his garage into a short-term rental. And then he also rented out on Airbnb the other rooms in his place. And then so he took that income from that property, having put so little in at the beginning, and he bought his next property.
Just so I'm clear, those are options if you don't already own a primary home. And I think that's great because you got a lot of people who, they're renting and they're thinking about getting into real estate and they see a path towards building something special. But I feel like what I'm hearing from you is if you don't have a primary, probably want to think about adding that to your strategy at the front. Like let's work on getting you into a primary that can eventually sort of morph into an investment property. That's probably the lowest cost or the lowest capital way to do it, right?
Yeah, it's a great point of entry into the market in general. So, and I think at that point, it's really important to pair with a real estate professional who has some experience in the area, can really pinpoint, because you get into jurisdictions that have a lot of restrictions for short-term rentals if that's the long-term goal.
Okay, so if you already own a primary home, like let's say I bought a home during the pandemic, I've got a sweet 2.5% interest rate. I'm loving it. I've got some equity in the home. What are some options for someone there who says, okay, well, I listened to the Vacation Rental Blueprint. I'm very excited in getting into, a short-term vacation rental. I own my home right now, but I've got a sweet interest rate and I'm not really focused. I don't want to lose that because it seems like something that people are telling me I don't want to lose. So, I mean, what are some options there if you already own a primary to think about?
Yeah, so we definitely hear that all the time. People don't want to lose a 2.5%, 3% rate, which is completely understandable. But we're really looking at more of a normalized market right now where we're seeing interest rates a lot higher. But some ways to look at obtaining that next property is going to be maybe second home financing, where you have to buy a property at least 50 miles from your primary. So a lot of people do that. They'll buy in vacation spots, places they want to visit. And then, the minimum down payment on that is 10%. I have some clients right now that are going in with friends of theirs just to split those costs. And that's definitely another way that you can take that next step. Another way would be taking out a home equity line of credit. Yes, those are still going to be a higher interest rate, but you're still hanging on to that low one on your first mortgage. But you can take those funds and put them into, the next property purchase if you're able to pull out, 10, 15, 20% out of your primary home.
Let's settle this once and for all. You talk to a realtor, they're going to tell you need to talk to a realtor first because they want to get your business. But everything I think about from just a small business, from a business executive standpoint, you want to figure out your capital first, right? And so to that, it makes me think you really want to, if you're interested and excited to move forward in short-term rental investment, or even you're getting a home, getting your primary, isn't it the lender? Doesn't it make the most sense to get a lender you trust locked down and really understand the right range that you need to be looking in, and also the right range so you can start your pro forma? TC, we talked 2 episodes about cash on cash return. You've got to be able to measure your cash on cash return, and that's downright impossible if you don't know what price range of home you're looking for and what a potential mortgage, plus insurance and taxes and all of that's going to look like. It makes it impossible to model a pro forma. Carrie, where do you want to get involved as a lender most advantageously with a buyer interested in getting into short-term rentals?
So it's important to understand affordability. So do you have a good credit score? And I'm talking good, especially if you already own a primary and you're looking to purchase your very first investment property, you really need to have 680 credit score and up. You need to have, 10 to 20% to put down. And you, depending on which way you go, you need to have the W-2 income in order to afford the next property. So I do get a lot of clients who do partner when they are missing one of those at least.
So should that individual be reaching out to a lender, reaching out to you to kind of determine the qualification level, or should they be pulling their own credit score? Should they be doing their own research? Like, it seems to me like they should be working through a lender as sort of a conduit to get all of those lined up and understand.
Yeah, definitely. It's important to reach out to a lender just to understand all of those things in your position. And also, like, what if one of those things is lacking, what do you need to do to get there? And figuring out what you qualify for, if it's the second home or if you want to just go straight into an investment property and you need that 20% down. And with interest rates being an important factor, it's just understanding what that interest rate looks like for you. Of course, the more you have to put down, the higher your credit, you have a better opportunity to get a lower interest rate than if you have, that 680 credit score and less to put down. So you're higher risk at that point.
So then as a lender, in the grand order of operations of getting into short-term rental investment, to me, and I think you're agreeing, the lender is really at the front of that order of operations. Getting connected with a lender, preferably one that's done short-term rental before, to understand, the different options that they have. You really want to get that locked in towards the beginning of your journey, because otherwise you're really throwing darts blindfolded trying to put together a financial model for your business. And then you find yourself just taking some assumptions that could come back and really bite you the wrong way around, you can help them model, taxes, insurance, not just the principal plus interest. I mean, there's other factors that you'll be able to provide insights to based on the area the individual is looking to invest in, correct?
Yeah. I mean, taxes are huge depending on where you're looking. They're going to vary by, the builder. They're going to vary by the area. You also have HOAs to factor in. A lot of vacation property communities will have a lot higher HOAs because they offer a lot more amenities.
Right.
But if you're looking in an area without an HOA, that's definitely something to factor in as well. And my company specifically, we run scenarios all the time when buyers are out looking at properties. So, I mean, it's definitely something that's nice to have to understand as you're house hunting.
So TC, I really wanted this episode with Carrie. I hope Carrie's had an enjoyable time so that she will come back and continue to dig into these scenarios and really have good conversations around lending, because I do think that there is a level of stress for a lot of potential individuals wanting to get into the short-term rental space. Lending is sort of that, maybe not eliciting fear, but, there's just a lot of questions, and it's a very complicated at times profession when you're looking at all these different scenarios. But, TC, you yourself, using lenders, I've used lenders, what comes to mind? Is there anything that comes to mind on your end in terms of individuals getting started out or early stage in terms of the lending game as a short-term rental investor?
I've been trying to make a lot of notes here, and Carrie, let me roadmap this out to see if this makes sense to you, because I'd love to provide our listeners with a roadmap. So if I don't own any homes, any property right now, I could get my first mortgage with 3 to 3.5% down. What I love about this is I'm always looking for ways to minimize cash out of pocket, because that's going to enhance our cash on cash return. Okay, So I'm in my first house for 3.5% down. Now, I could house hack that, right? I could rent a room on Airbnb, or if I've got an apartment over the garage, I could house hack that and start generating some income, right? Okay, so now I'm generating some income, and now I can get a second home for just 10% down.
Okay. So if you're hanging on to that first property and you are generating income from those rooms, great. So, and you want to stay in that property and invest into a second home, that's definitely possible. It's going to be a 10% minimum investment.
So now total, I'm only out 13.5%. So 3.5 down on my first house, 10% down on my second house. And now I've got this second house that can be generating revenue in the short-term rental pool. I'm still renting a room or maybe the apartment over the garage. So I've got two incomes coming in. And now when I start looking at that next investment, I'm 20% down and more of a traditional investment. Is that right? So a roadmap could be for our listeners, if you don't have a home yet, 3.5% down, try house hacking. A lot of folks do it with a lot of success. Could be just renting rooms like Airbnb originally launched doing, or the apartment over the garage, and then get a second home, 10% down, got to be 50 miles away if I heard you correctly. And now you've got two income producing properties that's generating money that you can apply for your third house down. So the way I like to think about this is with every step we take in this roadmap, we're generating income that can be used for down payments in future homes. And then with that third home, you could look at the home equity loan or the HELOC as a way to, once again, minimize cash out of pocket. I wish I would have met you 10 years ago. This would have made my life so much easier. And now I've got to rethink my objectives and my strategy, but that's what happens when we have smart guests on our show.
So Carrie, we will make sure that we have your contact information in our show notes, because essentially, we've worked with you and we enjoy working with you. And I know you specialize in this space and you're really focused on helping people get started out in short-term vacation rentals. So your time I know is valuable. You probably missed 50 calls since you've given us your time today. So I appreciate that. Anything else that you want people to keep in mind, we'll definitely have you on future episodes. And we look forward to continuing this conversation on lending because it is the foundation. Without being able to secure your funding for your property, pro formas, CleaningBnB, the short-term rental consultant, vacation rental blueprint, it's all useless if there's not a clear roadmap for individuals to get into their first rental. I think it gets fun once you get beyond the first one because I think your options open up and there's a little more strategy and gamesmanship that goes into expanding your portfolio from there. I think we've had another great episode and I think we've got our roadmap initially for individuals to be thinking about getting started. And how do they do it from a financing funding side? What are some options for them? And really, there's a lot of opportunity just getting into real estate. I think that's the key, and you and I have talked about it at length is, you got to start. You got to start somewhere. And, there's options there to get started. A lot of it does hinge on just getting started in real estate. And that might be a primary, that might be a multi-unit property, that might be finding a co-borrower. But the strategy is not just wait, right? That's never going to be the strategy for this type of game.
No, I think that's a good comment because, so often we hear our listeners talk about, well, interest rates are high, let's wait. Or price values have gone up, let's wait. Waiting, again, my experience, waiting is never a good strategy. It's more about, as we talked about in a previous episode, let's really detail what are your objectives, what are your strategies, what are your tactics, and waiting is rarely, nor should it be, any part of those three.
All right. And with that, everyone, thanks for another great episode. Thanks for checking in with us. Please like, subscribe, tell your friends, anyone interested in vacation rentals. Carrie, anyone that you come across that you talk to who's getting into short-term vacation rentals, you know the drill. Go ahead and tell them about Vacation Rental Blueprint. Please also tell them about our sponsor, CleaningBnB, because they do a fantastic job. So Thanks, everyone. And we look forward to talking again soon.